Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Alia binti Sazali, and today I am here with my partner Rozana binti Nurbadi, and for today we will have a discussion about a topic in audit, which is assertion, and the subtopic that we get from assertion is completeness. So before we start, we need to know what is the main key point for assertion and the meaning of assertion. So assertion are the implicit or explicit claims and the representation made by the management who is responsible for the preparation of financial statement. Assertion are used by the auditor to assess misstatement and to obtain evidence. And after assertion has been made, the financial statement are called as financial statement assertion. So now we have a look about what is financial statement assertion. Financial statement assertion are company's official statement that the figures the company is reporting are truthful presentation of its asset and liability. Now here are several examples. Here are several of the subtopic of assertion, which is occurrence, existence, cut-off, accuracy, and also completeness. But for today, we will only be discussing about completeness. Here are the key points of completeness. So the assertion of completeness means that all the transactions that should have been recorded are recorded in the financial statement, and all of the transactions that were supposed to be recorded have been recognized in the financial statement. Now let's have a look about what is this key point all about. So the assertion of completeness is an assertion that the financial statement are through and include every item that should be included in the financial statement for a given period of time. So this assertion of completeness is tested for any understatement in the financial statement. In simple words, we can define that assertion of completeness is if accounting standard require that a transaction should be recorded, it should be recorded, and profit or loss statement will only be considered as complete if all of the transactions are recorded in it. Now, let's have a look of this very simple example about the definition of assertion of completeness. So first of all, the completeness of transaction in a financial statement can be determined when all of the transaction included in the statement occur during the accounting period. Next, when we have identified that the transaction actually occur during the accounting period, then we should see whether it is included in the statement. That is how we confirm that a financial statement have met the assertion of completeness. Now moving on to the very first example, which is how can we determine our assets, liabilities, and equity balances at the end of our accounting period using the assertion of completeness. So first of all, again, the basic meaning of assertion of completeness is that all assets, liabilities, and equity balances that were supposed to be recorded have been recognized in the financial statement. So this means that all of the inventory units that should have been recorded have been recognized in the financial statement, and any inventory held by a third party on behalf of the audit entity has been included in the inventory balances. This is how we determine that the asset, liability, and equity balances at the end of the period of accounting at the end of the accounting period has met the assertion of completeness. That's all for me. Now I will pass this presentation to Rosanna.
Example number 2. As you see here, this is the statement of profit or loss for year end 31st December 2020 for company Cik Februari Senam Berhad. We consider that the example of sale worth to RM 1,000 ringgit. To test this completeness assertion, we need to make sure that there are sale invoice to customer, and we also need to check whether the company posting its general ledger correctly. So, let's see the sale invoice below. This is the sale invoice to customer whose name is Sarah. As you see, Sarah purchased 2 pieces of hoodies size M for RM 11 ringgit per pieces, and she also buy 1 pieces of jeans size 29 at price 8 ringgit per pieces, and she also buy 1 set of handkerchief which is priced 4 ringgit per pieces. So the total she buy is 41 ringgit 5 cents, include the sale tax 6% and also the shipping fees. This is mean that there are transaction happen which is 41 ringgit 5 cents. So we need to identify whether the company posts this sale to its general ledger. Here is the sale ledger that we can find, and as you can see, the sale was 741 ringgit 5 cents, with only 1 transaction from Sarah, 41 ringgit 5 cents. But the company record its sale in the statement of profit or loss, RM 1,000 ringgit. So this shows that the company does not complete their financial statement correctly by posting the sale ledger to statement of profit and loss wrongly. We see here completeness assertion also same as profit and loss statement, which is all the asset, liability, and equity items should have been recorded and actually recorded in the statement of financial position. To test this completeness assertion, we identify that their ledger and make sure that all the asset, liability, and equity items must be recorded. So we just need to pick up any asset such as machinery and trace it whether the company record in the balance sheet. So here we pick machinery to check whether the company record it or not. As you see here on the balance sheet, there was no machinery record here. So after we check the company ledger, we find that there are transactions and machinery items, but the company did not record this transaction 550 ringgit into this balance sheet. So this means that this example company has not made completeness assertion in the financial statement because there are no missionary record on the statement of financial position. Next is conclusion of this topic, assertion and the completeness. The assertion for completeness is an assertion that the financial statement are throughout and include every item that should be included in statement for a given accounting period. And the assertion of completeness also state that a company entire inventory, even the inventory that may be temporarily in the possession of a third party, is included in the total inventory figure appears on a financial statement. So that's all from me and my partner Nur Alia. Thank you.